Hello, this is Jordan. This video is being recorded on the evening of Tuesday, February 21st, 2023. Thank you so much for joining me today. And in this video, I'm going to take a look at a couple of data points on the economy and also take a look at a great chart that shows at least an average of how gold performs during recessions, at least since we've gone off the gold standard. So starting off, and I'm just looking at a couple of classic economic indicators. Maybe at some point I'll do a deeper economic update with lots of charts, but perhaps take some of this with a grain of salt because I'm not an economist. That's not my expertise. I'm not analyzing everything. But if we look at some of the big picture classic indicators like the LEIs here, also the yield curves, I mean, these indicators, these data series are making a very strong case that a recession is coming. If we look at this chart here, composite index of 10 leading indicators, the LEIs, for short. So on the left, that's the index, and then on the right, you can see the percentage change over 10 months, and then annualized. So if we're looking at the left, what's interesting is if you go and look at, if you can find that chart on Google Images and you just look at it back to 1960, you can basically see that all of the soft landings, when there were soft landings, you look at the mid-60s, mid-80s, mid-90s, also 2018. When you're looking at the LEIs, during those soft landings, there were just tiny moves down. I mean, even in some cases, it was really hard to see. Now, on the left there, that's going back to 1990. I mean, look at 1995 there. I mean, that was a soft landing, a little bit of just a tiny move down in the LEIs. Same thing in 2018. Looking at 2018, you really didn't even have. I mean, it was a tiny move lower, and then you had a little bit of a move higher before then it started to trend down, even before COVID. But you get my point. And I mean, same thing when you're looking at the chart on the right, the last 60 years. Again, the soft landings were mid 60s, mid 80s, mid 90s, and then 2018. And so we can see, if we're looking at those soft landings, I mean, you can see 1966, I mean, it did go below zero, went below zero a tiny bit in the mid-90s, and then 1998, and then it looks like 2016 or so. But basically, when you look at what's happened, you look at that data on the right, any time that has come down that far, you've had a recession. And, there's this talk that we're going to have no landing, or at least right now there's no landing. I think people are forgetting, and even, I was forgetting in recent months. You have the yield curve inversions, and then typically it can take, depending on the data, I mean, it can take another year for the recession to hit after the inversion. And that's why when you get these inversions, a lot of permabulls and Wall Street types, they always put out showing how the market has a strong performance. But even with that being said, I mean, the market has rallied, but it's still below the highs. It hasn't made higher highs. But my larger point with the yield curve inversions is they point to the fact that the recession is coming in the months ahead. And in most cases, it doesn't. If you take the median or the average time of when the recession hits after the inversions, depending on which curve you look at, I mean, we're looking at the absolute soonest, I think, April or May. And then in most cases, we're looking at, August, September, maybe even as late as October. Now, this is just one chart. This is one example. I pulled this from Stifel and Barry Bannister, who's probably my favorite strategist. He has, to me, the best track record over the last 20 years of calling major turns in the markets, in the economy. He was bullish on commodities 20 years ago. And then in, I want to say 2012 or 2013, he flipped to being bearish on commodities, really bullish on the stock market. So he's totally right about that. Now he's saying we're probably going into a secular bear, and he's bullish on commodities again. And so this is a chart from one of his excellent reports. And so he looked at all these yield curve inversions and the median and average time of when the recession should hit, according to him, is in the third quarter. So, we're towards the end of February now. The third quarter, that's what, 4.5 months away. Something like that. So you get the point. It's still a little bit early to expect the recession to hit. So I think it's going to have to be like another. I mean, if it's 12 months from now or even 15 months from now and the recession hasn't hit yet, then at that point maybe we do have a soft landing. But even in that case, I mean, it's possible the recession could hit 12 months from now. Even if the data tells you it's probably going to hit 5, 6, 7 months from now. So I guess that's just, again, looking at this data that makes a strong case recession is coming. The yield curve inversions, again, since the late 1960s, 1966, that's the only time there was an inversion in the last 60 years, 55 years, whatever, and there wasn't a recession. So you're looking at these things that have a really, really strong track record. These are big picture indicators for the economy. So the odds are very strong that we are going to get hit with a recession later this year. And even if you look at what's happened in recent months, the Fed now, given the data, they're going to have to tighten a little bit more. And the other thing is, we have not had like 4%, or even 3.5, 3.75, 4%. We have not had that high of these rates. They haven't been that restrictive for that long. I mean, you're only talking about a quarter or a quarter and a half. If you go back to 6 months, rates were still barely at 2%. So even though hiking from 0 to 2% seems significant, it's really when you get to 3, 4, and then 5, 5.5%, and then it sits there for a quarter or two. That's when it starts to get really restrictive and hit the economy. And so that impact we haven't seen yet. That impact is probably going to be coming, this spring and in the second half of the year. So again, we're looking at all these factors. A recession is very likely to happen in the second half of the year, third quarter. And so what does that mean for gold? Where this is a great chart here, looking at gold's performance around recessions. I would ignore the red line. That doesn't, we haven't been hit with a recession yet, so I would just ignore the red line. The gray, that's the 20 to 80% range. But the black line, I really like that. That's the average of gold's performance around recessions. And if you look at the black line, typically there is some weakness. You can see it looks like, and this is just the average, it looks like it bottoms, 1 to 2 months before the recession hits. And then you can see the strongest performance is when the recession hits, and basically the next 4 months. And so if you're looking at that over a 5 or 6 month period, that's pretty close to 20%, a 20% rebound from the low before the recession starts, then to the average peak 4 months into it. And so what that means for gold is even if gold bottoms, it's like, let's say gold makes a low in the spring at the low 1700s or the even 1700, and you look at that average gain, that projects up to 2050 an ounce or 2070 an ounce. So that's, but you're basically based on that info, gold can rally. Based on the recession hitting, gold can rally and retest its all-time high. So based on this, based on this info, if the recession hits, let's say it hits in July, that could tell you gold could retest its high, November potentially. Now this is just looking at the average data and how gold performs after the recessions. But I think the bottom line is, and this is something. I mean, it's pretty obvious, but if there's going to be a recession in a hard landing, gold is going to do really well, and gold's going to break out at that point. So for precious metals, that's really what we need. And in the next couple months, we could have higher yields, a tighter Fed. Economic data is still holding up. And so the outlook for gold over the next couple months doesn't look that great. However, based on everything I've talked about in this video, we should be ready for gold to reverse course. And if it looks like a recession is going to hit, that's going to kickstart gold to retest its all-time high before the end of the year. All right, talked a little bit too much in this video, but let me know what you think in the comments. Talk to you guys again in the next video.